afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 16th of May, and as always on Tuesdays, we have Charu Chanana, market strategist from Saxo Capital Markets. Now, Charu, welcome to the show.
Thank you, Brian.
Now, Charu, before we get your insights, we're going to take a look and see how markets across the region have performed. But first, we're going to start with cryptocurrencies. Bitcoin is at 27,119. It's down 0.57%. Ethereum is at 1,812. It's down 0.77%. Looking across the regional stock markets, we start where you are at the moment, Charu. The SGX Straits Times Index is down 0.05%. Bursa Malaysia over in KL is up 0.52%. Shanghai is down 0.04%. The ASX All Ordinaries is down 0.42%. The Nikkei is up 0.77%. The Hang Seng is up 0.31%. Rounding up the numbers, we've got the Kospi, which is 0.14% up. Charu, your view on market performance in the first half of the day?
So clearly, Brian, I think if you remember last week, we chatted about the possibility of an outperformance from Japan this year, and that's exactly what's also playing out in the short term. The Topix index in Japan is reaching its fresh highs as well as Nikkei is getting very close to its critical resistance level of 30,000. So yeah, investor optimism on Japanese markets is increasing, and coming out of the earnings season as well, it has been proven that Japanese corporates are in a pretty strong position right now. So clearly, we see that in the outperformance today as well. But of course, China data has had given some jitters again to the markets, and that reopening boost seems to be fading away. So that's creating some downside pressure in Chinese equity markets. And overall, I think also there's an overhang from that debt ceiling talks that going on in the US and scheduled to take place again today between Biden and the Congress. So I think also some investors possibly just waiting on the sidelines for that to play out.
And just for the benefit of our audience, China data came in, whether it was retail sales, industrial production, fixed asset investment, all came in below expectations. So this is what Charu is referring to in terms of the dampened sentiment around the recovery story in around China. But one of the things that is very interesting, Charu, that we were discussing offline was really this whole commodity these commodity staples price rises, everything from
Mhm.
rice to sugar to wheat. Tell us about this and how this is relatively slipped under the radar, but is very, very
Yeah.
important globally.
Yeah, exactly. Very pertinent point there, Brian. It's actually slipping under the radar. The whole commodity index is down because of pressure from, demand side concerns, where you see that China story is not picking up, as you mentioned, from the activity data today, but also import data, credit data that we saw. All of the set of, April economic data has been pretty weak. So, of course, that is creating some downside pressures on the commodity index as a whole, but more so on the metals complex. But what is really missing out from people's attention is this heat wave. And, I felt it in Singapore over the last weekend. It was so difficult to get out of the house, the heat wave. And that is really creating an impact on the agricultural output as well. So there are reports that rice plantation in Thailand is going to be, impacted because of a risk of El Nino. El Nino means that we could see record high temperatures in a lot of places. So that does mean that a lot of the crop production will be impacted. And remember that Thailand is the second largest exporter of rice, and rice being one of the staples that are needed, and especially in Asia, I think it is going to create some food inflation pressures again. So it's again a risk that we cannot just put inflation at the back burner. The cyclical story may be turning, but we still have those structural headwinds coming from this climate changes, from just the global fragmentation theme that's been playing out, and the friend shoring and the near shoring that's playing out in the manufacturing supply chains as well. So all of those concerns continue to keep the inflation debate still quite alive.
Now, the other thing I wanted to talk to you about, Charu, was really around where investors should be putting their money. And an interesting way for our audience to look at is really to see where the money's flowing from Saxo, from your clients and stuff. Where the money flows, is money flowing into commodities, equities? Where is it going?
Yesterday, one of my colleagues actually put it very succinctly. He said, it's not the time for trading. Markets have been so sideways, and the constant thing we keep hearing from clients is, which way it's going to go. And certainly, it looks like equity markets are not pricing in a recession for now, which the bond markets are. And the way the sentiment is weakening, we've seen that from some survey data coming out of US or off late. From Friday, we had the Michigan survey, and then Monday, yesterday, we had another New York Fed survey as well, and sentiment is weakening significantly. So it does appear that consumers will start to pull back, but equity markets are still, trading at a very healthy levels of PE. If you look at that, and the earnings season has been decent as well. Most companies have met the low bar that was set by earnings expectations, and they are also revising up their outlook for the second half of the year. So equity markets are still not able to price in that recession risk. So it does look like it's going to go down, but they're so range bound right now that it's obviously difficult to trade. But when you can't trade, you go fishing is something that we've been telling clients about. So it is going to be a time where you can really get things at some attractive prices if that downturn does come, if equity markets do price in a recession. So of course, keep some cash ready to lock in positions, which you want to hold for your long-term portfolios. But obviously, I think the thing that really helps you to get through these difficult times is a well diversified portfolio, and exposure to Asia is something that I can't encourage enough. It's looking like, obviously, it will be the most resilient if we were to see a recession globally, and most particularly in the US in this cycle. So I think diversification and a little bit of de-risking, adding some safe havens to your portfolio, like Japanese yen, like gold, for example. Of course, bonds, treasury bonds are giving pretty attractive yields. And if you look at the short term and the medium term, I think it's a great time to lock in those yields as well. So I think, yeah, there are still a lot of great opportunities in the markets.
Charu, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you. It was a pleasure, Brian.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets, and on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.